So, what's the deal with Donald Trump's new proposal to cap credit card interest rates? It's a huge promise that's got Wall Street talking and a lot of us asking a pretty simple question. What would this actually mean for me? Today, we're going to break it all down.
Okay, so here's exactly what he said. On January 10th, Trump put this out there on Truth Social. He called for a one-year cap on credit card interest at 10%. His whole point was that big credit card companies are ripping people off with these crazy high rates. It's a really simple, really powerful message.
But you know, a simple promise can lead to some really complicated questions. Is this the kind of financial relief millions of people have been hoping for? Or could it totally backfire and make it even harder for people to get credit when they need it most? That's really the big question we're digging into.
To really get how dramatic this idea is, we first have to look at what's happening with credit card debt in America right now. And wow, the numbers are pretty eye-popping.
Yeah, you're seeing that right. The average interest rate on a credit card in the US is floating around 23%. What's even crazier is that just 10 years ago, it was only 14%. That's a massive jump, and it's hitting people's wallets hard.
And this chart just puts it all into perspective, doesn't it? We are not talking about some tiny little adjustment here. Trump's plan would literally slash that average rate by more than half, from 23% all the way down to 10. That's a radical shift.
And here's why all of this matters so much. That 23% interest is being charged on over $1.2 trillion of debt. Just think about that. That is a staggering amount of money going from our pockets straight to the banks year after year.
Okay, so the idea sounds massive, right? But it brings up a really important question. Even if a president wanted to do this, could they actually just make it happen? Let's get into the political reality of it all. Which leads us right here. Trump made the promise, but can a president just walk in and force banks to change their interest rates?
Well, the short answer is not really. A president can't just snap their fingers and set a national interest rate cap. That power belongs to Congress. So a promise like this completely depends on them. Now, that doesn't mean a president is totally helpless here. They could try to use an agency like the Consumer Financial Protection Bureau to make new rules. And they can definitely use their platform to put a ton of pressure on Congress. But at the end of the day, only Congress can actually write and pass a law that sets a hard cap like this.
And hey, this isn't some brand new idea. Just last year, Senators Bernie Sanders and Josh Hawley, a pretty unlikely team-up, right? They introduced a bill to do something pretty similar. It went absolutely nowhere. And even the current House Speaker, Mike Johnson, has basically said he's not so sure about the plan, which tells you it would be a tough fight.
So while Washington was debating if this was even possible, Wall Street, well, they had a much more immediate reaction. The second Trump's post went up, the alarm bells started ringing.
Right away, you had bank executives jumping into damage control mode. The chief financial officer of JP Morgan put out this really stark warning. He argued that a cap would just force banks to stop lending to anyone they see as a risk, which is often the people with lower credit scores who need it the most.
And it wasn't just them. The CFO of Citigroup pretty much said the same thing, calling the idea flat out bad for the economy. So the message from the big banks was loud, it was clear, and it was unified. This would be a disaster.
So what's their argument? Why are rates so high in the first place? Well, they'll tell you it comes down to three things. First, risk. Not everyone pays their debt back, so high rates cover those losses. Second, it costs money to run these huge rewards programs. And third, let's just be real, profit. Interest is how they make a lot of their money.
But then you have the other side of the coin. Consumer advocates point to this number, $150 billion. That's what banks make every year just from swipe fees. That little charge every time you use your card. That's pure profit before they even collect a penny of interest. And that kind of makes you question if they'd really go broke on a 10% cap.
All right, so we've got the political hurdles, we've got the warnings from Wall Street, but let's talk about what really matters. What does this actually mean for you and your money?
Well, it really is a trade-off. The good news is obvious, right? If you're carrying a balance on your card, you would save a ton of money on interest. But then there's the flip side. The banks would probably try to make up for that lost money by cutting back on rewards programs, maybe raising annual fees, and almost certainly making it harder to get a card in the first place. But let's put some real numbers on this to see how big the savings could be. Let's say you have a $5,000 balance at a pretty normal 24% interest rate. Right now, you're paying about $1,200 a year just in interest. If that rate dropped to 10%, you'd only be paying $500. That's an extra $700 in your pocket. That's real money.
Look, let's be real. This whole thing is probably a long shot. So instead of waiting around for Washington to maybe fix things, let's talk about what you can actually do starting today.
Here's the bottom line. Whether this proposal ever happens or not, you probably shouldn't count on it. The best move you can make is to grab the wheel of your own finances because you have way more power than you might think.
So here are 4 powerful things you can look into today. First, hunt for a 0% APR balance transfer card. That can give you a whole year, sometimes longer, to pay down your debt without any interest. Second, check out personal loans. You can often roll all your debt into one single payment at a much lower rate. Third, and this is a big one, never carry a balance just to get rewards points. The math will never, ever work out in your favor. And finally, just be your own watchdog. Keep an eye on that credit score and know what your limits are.
You know, when you step back, the most interesting thing about all this might not be the proposal itself. It's what it shows us. When you see names like Donald Trump and Bernie Sanders on the same side of an issue, that tells you something's up. It shows there's a real, deep frustration in this country with how much credit card debt costs.
And that really is the big question we're left with. Is the government stepping in the right answer? Or would a cap, even if it's well-intentioned, just end up creating a whole new set of problems, like making it harder to get credit and killing off those rewards programs everyone uses? It's a tough one, and it's right at the heart of this whole debate. What do you think?